Analysts are circling the charts again. Shiba Inu is sliding back into a familiar demand zone, and every candle suddenly matters. Buyers have defended this region before, but the latest crypto crash has shaken confidence. Is this where smart money quietly steps in, or the level that finally breaks? Tonight, we dig into real data, fresh predictions, and what this zone truly means for traders, investors, and true believers alike. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more Shib news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. According to live market data, Shiba Inu is trading today around 780 units. After moving in a narrow intraday band between roughly 777 and 784 units. That puts its market cap close to $4.7 billion, with 24-hour trading volume hovering near $115 million. The circulating supply remains enormous, at more than 589 trillion tokens, which is why even sharp percentage swings rarely look dramatic on the price chart. Broader market recaps show that the latest phase of the crypto downturn has pushed total crypto capitalization back toward $3 trillion after erasing hundreds of billions of dollars in just a few weeks. Bitcoin has dropped sharply from its recent highs, and large-cap altcoins are following the same pattern, leaving speculative corners of the market under heavy pressure. In this environment, high-beta assets like Shiba Inu tend to amplify whatever the wider market is doing. According to a widely shared chart analysis, Shiba Inu is now revisiting a major demand zone between approximately 700 and 550 units, a band that has defined every major multi-month rally since 2021. In that study, this region is described as more than just a simple support line. It is framed as a psychological pivot separating long-term accumulation from full-blown capitulation. Each time Shiba Inu has tapped this zone in the past, aggressive buyers eventually stepped in and forced a trend reversal, though sometimes only after painful sideways chop. In the latest update from that same analysis, the author notes that price is once again pressing into this historic area, with candles showing long lower wicks intraday as dip buyers attempt to absorb supply near the bottom of the range. This is the technical backdrop behind our title. Shiba Inu sits in a familiar battlefield, where history shows buyers have fought hardest to defend their ground. Recent daily candles show a slow slide into this demand zone. On 21 November, Shiba Inu closed near 800 units. On 22 November, it faded slightly and stalled around the 800-unit mark again, failing to push higher despite short-lived green candles. Today, on 23 November, the intraday range has compressed further, with price oscillating just under 800 units and probing the high 700 seconds repeatedly. This tightening of the daily range at progressively lower levels is typical when a market approaches a critical decision area. Bulls try to hold the line at familiar levels, but each bounce gets a little weaker, while bears test the resolve of buyers with controlled, persistent selling. Volume has also cooled from earlier in the month, dropping from well over $170 million per day toward the $115 million region. That does not mean interest has vanished, but it suggests that aggressive speculative flows have stepped back. Sector-level breakdowns show that the entire meme coin segment has been punished harder than most during the latest risk-off wave. Total meme coin capitalization has dropped significantly in November as traders abandon the most speculative names first, hunting safety in Bitcoin or even in FIDE, traditional assets. Yet the same reports also highlight an interesting detail. Even after weeks of selling, some of the strongest historical accumulation zones are now being revisited across multiple meme assets. For Shiba Inu specifically, the highlighted demand zone analysis shows that long-term holders have traditionally treated the 700 to 550 unit band as a value region. When price entered this area in previous cycles, on-chain metrics often recorded a rise in dormant wallet activity and a shift from exchanges back into self-custody. While up to the second on-chain dashboards for this week are still catching up, derivatives data and open interest charts cited in market overviews show a clear pattern of long liquidation, followed by cautious rebuilding of positions. That combination often marks the late stages of a downtrend, but it does not guarantee an immediate bounce. Sometimes markets can grind along the bottom of a range for weeks, shaking out impatient traders before any meaningful recovery even begins, and Shiba Inu is not immune to that behavior. Several technical outlooks compiled this week suggest that the key question for Shiba Inu is not whether this zone exists, but whether it will hold once again under the weight of a weaker macro backdrop. One group of analysts argues that as long as daily closes remain above roughly 700 units, the structure can still be described as a broad consolidation rather than a full breakdown. They point to the fact that, despite heavy selling, Shiba Inu is still trading well above its absolute bear market lows, and that every visit to this demand region has eventually led to higher prices over multi-month horizons. Another camp is more cautious. They emphasize that this touch of the zone is happening in the context of a major crypto-wide deleveraging event, with Bitcoin threatening deeper losses and altcoins already down heavily year to date. Recent macro pieces warn that if interest rate expectations keep shifting and risk appetite continues to fade, the pressure on speculative crypto will remain intense. For these cautious voices, a clean loss of the 700-unit area on a weekly closing basis would confirm that the market has shifted from accumulation to distribution. Social sentiment trackers that monitor X and community forums show a split mood inside the Shiba Inu army. Long-term believers are publicly reminding everyone that they have seen this movie before. Price falls into a familiar zone, critics declare the project dead, and months later, a surprise rally proves them wrong. These posts are filled with screenshots of earlier cycles and comments about patience and conviction. On the other side, more tactical traders are clearly nervous. They highlight the shrinking impact of recent burn announcements, the competition from new meme plus utility coins, and the reality that many retail holders bought much higher and are now deeply underwater. News about alternative meme coins rallying on presale hype or new utilities adds to this tension, as some participants openly consider rotating a portion of their capital out of Shiba Inu into newer, smaller projects. Developers and ecosystem promoters continue to emphasize Shibarium usage, DeFi integrations, and upcoming features, but even they acknowledge that macro conditions are doing most of the talking. Automated technical dashboards on major exchanges show that short-term indicators for Shiba Inu are mixed but not hopeless. Daily momentum oscillators sit in or near oversold territory, suggesting that downside energy may be tiring out at these levels. Some 30-day projection tools model a modest recovery back toward the 800-unit area if current support holds, essentially betting on a sideways to slightly up consolidation rather than a dramatic new leg down. At the same time, volatility measures show that the band between roughly 700 and 850 units is where most of the recent trading has taken place, reinforcing the idea that this is the zone to watch. Over the next 1 to 4 weeks, traders will be paying attention to whether price can start printing higher lows within this band, a classic early sign that demand is quietly rebuilding. Shorter-term scalpers may also focus on intraday bounces off the lower edge of the zone, but those opportunities will be higher risk as long as the broader trend remains fragile. If, instead, candles begin closing decisively below 700 units, the short-term bullish case weakens quickly and defensive strategies dominate. Over the 3-month to 3-year horizon, the demand zone discussed today becomes less of a precise line and more of a historical region on the chart. Long-range forecast pages and macro commentary suggest that Shiba Inu's future path still depends heavily on factors far larger than today's intraday levels. Bitcoin's next major cycle, global liquidity conditions, regulatory clarity, and whether Shibarium and related ecosystem projects can attract real, sticky usage. In bullish scenarios, analysts imagine this 700 to 550 unit area becoming the bottom range that long-term holders look back on as an obvious accumulation gift. In more moderate or bearish scenarios, Shiba Inu spends extended time chopping around these levels, delivering only range-bound opportunities for disciplined traders with tight risk controls. The real risk is not that a single demand zone fails once, but that investors treat any level as invincible. no zone is guaranteed to hold. So, here we are again, with Shiba Inu balanced on a crucial demand zone while the broader market trembles. Will this become the launchpad for the next leg higher, or just another stop on a longer grind lower? Whatever happens, manage your risk, respect the data, and never trade on hype alone. I will see you in the next deep dive very soon, with clarity, discipline, patience, and proper expectations. The day is over now. Remember to give it a big thumbs up, to see our most recent material, share it, and subscribe to the channel.